Hello and welcome to the Stock Planner channel. Tonight I'd like to talk about healthcare and a company called Humana. I believe healthcare will be strong for the future, especially for the next decade. There will be a lot of technological advances and innovations and discoveries. This is a chart of Humana, and you can see that it swings very nicely. And if you can capture these peaks and valleys, you can make a nice profit. The Stock Planner channel, we are swing traders and we try to learn from each other, and we are doing our own due diligence. I'm not your advisor, but we can learn from each other. Let's get started. We want to predict these peaks and valleys, and I like to look for indicators that will help me predict those peaks and valleys. Now, of course, if you're sitting right here, you have no idea what's going to go on in the future here. And so in this case, the MACD is well below the zero line. The stochastic RSI, which is another indicator I use, is come around. And the RSI, which I heavily use, was below the 30 and came back around. So this predicted up along here, but it went short. If you held it long enough, it would have been a winner. But this did not predict a good result. However, the MACD is well below the zero line now. Stochastic came back around, and the RSI was below the 30 and came back around. That predicted a nice. We have the RSI coming above the 70 and coming back around, but this case, the MACD is not too far above the zero line. And that eliminates some of these too for singles. We want it to be well below a distance like this, and that would have predicted a good run up. So now we have a situation where the RSI is below the 30 and is about to come around. In fact, I got a little signal at 9:30 on Friday morning. The MACD has crossed well below the zero, and the stochastic RSI has not quite come around yet. The zigzag for one bar does not know what it's doing. That normally means it's trying to go up. And we had a large gap here, and somehow this stock is going to come up. If you believe in the gap fills theory, it will fill the gap. Swing trading is primarily technical, looking at indicators, chart patterns, candlesticks. But I believe to be a good swing trader, you need to look at the fundamentals and what's happening in the world and the environment. Is it earnings? Is there some news? There's lots of things that can affect the price that you need to be aware of. So it's just not looking at a chart. You have to be aware of what's going on. So we just can't look at the technicals. We have to look at the fundamentals. You know, under the Biden administration, I believe that healthcare will be an industry that's looked favorable upon. It will benefit from his administration. Let's take a further dive into the fundamentals to see if a buy is warranted. And I will admit to you that I've entered a Humana trade 2 to 3 days earlier. Lately, I have been jumping the gun. Looking at tip ranks for Humana, you see it's trading at 419, and the analysts have stated that it should go up to 485, even predicted as high as 515. It's being covered by 12 analysts, and it's got a buy. It's good coverage. Ooh, underperform. Hedge fund activity decrease. Sold shares. Earnings. And the next earnings is November 4th. It's got a good target price yet. Using Simply Wall Street and the Snowflake. We would like to try to get a snowflake that's filled with green, but this is reddish orange. That's so good. And these are some other healthcare companies. United Health Group seems a little better. So is Anthem. Humana is trading below 40% below its fair value, and earnings are going to grow about 12%. High level of debt, and the profit margins are lower than last year. You don't like to see that. Here's the current price, and here's the fair value. The growth, 11.6%. Here's the company. Revenue growth is about equal to the market. This is not all that bad. And this is your past performance over the years. Last year, what didn't do so hot. In the past 5 years, it was pretty good for the earnings growth. But the last year, that's not good. Again, Simply Wall Street says that fair value for this stock is $7.48 based on free cash flow. Tip rank has got it $4.85. Target equals $4.85. Somewhere up here. So the fundamentals say this is going to be a slow growth stock, even though it's a target price of $4.85. It drops significantly after earnings, and what happens a lot of times is over the next month or so, this gap will tend to fill. You could do an option play here or buy the stock. If you have a small account, you can only buy about 2.5 shares, assuming that you have a $5,000 account with $5,000 margin, placing each trade that you make about $1,000 gives you 2.5 shares. Or you could look at an option, a bull put spread of some sort. Anyway, I went long 2-3 days ago. What do you think? Is this a long play? A hold play? Forget it. Go on to the next one. What do you think? Buy, sell, or neutral? Please leave your comments below. Please like and subscribe. And remember to do your own due diligence and blame nobody else but you for your losses and wins. Did I say like and subscribe? We sure could use some subscribers. Happy trading. I like what I'm doing. Catch you on the flip.